for joining this morning. Welcome to the series Skating During Tumultuous Times. So I've been running webinars since March. March was very much around business risk and how you manage that during black swan events. And throughout April, I've been hosting these webinars for each market. So our first webinar was with the US, that was last week. We now have Singapore, and I'm thrilled to be running this and hosting this webinar with our guest speakers, so I'll introduce shortly. And next week, we'll be focusing on the UK and EMEA as well. So stay tuned for details as that gets rolled out. The objective of the webinars is really to give you a snapshot of what's happening on the ground from local experts. Our next round of May webinars will be based on individual sectors, individual industries. So we'll be doing deep dives on those industries in the markets based on the interest that we get. I do ask that you turn your mute button on and your video off, just so we don't have interference network issues. And also, we do welcome for questions. So in the top right-hand corner, if you're not accustomed to Google Meet, you'll see a little chat box up the top there. Please submit your questions online. I'll get to them, hopefully. But at the end of the webinar, there will be time for questions to be asked as well. So today our focus is on Spotlight Singapore, and I'm delighted that I have 4 panelists from Singapore to share with us what is going on the ground. So we have Rob, Nitin, Guru, and Jay. So I'm going to ask each of them to introduce themselves. So Rob, I'm going to ask you first to introduce yourself.
Thanks very much. Hi everyone. Welcome from Singapore. So my name's Rob Holm. I'm the Director for Asia for Beanstalk. Beanstalk's an innovation agency, sort of sitting at the intersection between investors, agribusiness, and innovators. So what we do is we're bridging technology solving challenges for agribusiness, corporates, and large family enterprise. We also work with several funds, private equity and family office, and also work closely with the government. So here in Singapore, a lot of our focus at the moment obviously is helping scale technologies, solving food security issues, and supporting businesses as they land in Singapore to scale throughout Asia. So I'm a farmer at heart, a 5th generation farmer from southern New South Wales. So somehow I found myself on a global tour, previously with Bayer, and currently here in Singapore for 4 years with my family.
Great, thank you, Rob. Nitin, over to you, please.
All right, thank you so much. Good morning, everybody. My name is Nitin. We've been based here in Singapore for about 12 years and have mostly been working on the finance domain. I'm a chartered accountant by profession, coming from the background of General Electric. Been mostly working with opportunities here in the Asia market, helping them sell heavy-duty equipment. So I've pretty much covered most of the Asia region market, going in and working with the private sector customers as well as the government customers. Currently we've launched a platform called Grow Asia, and that's what we'll kind of walk you through a little bit about, and we'll kind of share a little bit more about our journey. Thank you.
Great, Nitin, thank you. And Guru, over to you for an introduction.
Yeah, hi, good morning, everyone. Guru Rao. I'm also a co-founder, managing partner at Grow Asia. But in my previous avatar, I was the regional procurement officer at JP Morgan, and before that in Deutsche Bank. So 20 years, primarily in financial services and banks, 10 years in the UK as an advisor, strategy, operating model, technology, and then moved to Singapore in 2010. And so I bring with me the expertise primarily in the financial services space, obviously seeing the vendor ecosystem up and close, looking at what is required from an MAS and the regulatory landscape perspective for fintechs to operate with banks and financial institutions in and across APAC. So glad to kind of make my introduction and hopefully This is going to be an interesting sessions and a lot of Q&A. Thanks.
Great, thank you. And Jay, over to you, please, for your introduction.
All right. Yeah. Hello, everyone. Is it good morning or good afternoon in Australia? My name is Jay. I'm based in Singapore. So I have over 20 years of experience, mostly from Singapore, this part of the region, and some from South Korea. So my specialization is in market access and business operations. So majority of the consulting work I've done is for the healthcare sector. When I say, consulting work means, mostly on the market access, competitive landscape, due diligence of technologies, commercial due diligence. So these are the kind of work I've, done for pharmaceutical industry, medical device industry, as they have product launches time to time on a regular basis. So last couple of years, I've been a venture advisor myself. So I have had the opportunity to work closely with startups, in process of shaping their business plans and, fundraising requirements. So I also act as a mentor with the MedTech incubation programs here. So in fact, one of the startups I work with, they managed to raise some money. So it's been a journey from a consultant, business operations consultant, and venture advisory. So I'm happy to share whatever I could. Yeah.
Fantastic, Jay. Thank you. Now, I'm going to switch over to screen share now. And if you can give an overview of the Southeast Asia region, so that we've all got in our minds exactly the opportunity and the size of the Southeast Asia region. So let me switch over now.
Thank you, Trina. So the way I'm going to do this is I'm just going to talk through some of these pages, and Rob, Guru, Jay, please feel free to chip in if you think you have other ideas to add on, if you have other aspects to kind of, add on those comments, right? Now, the reason why we thought we'd start with some pages, normally we wouldn't, but we just wanted to kind of lay out the full picture. And I don't know if it's possible for you to blow it up a bit, maybe make it full screen.
Let me have a look. Is that better?
Perfect. Thank you so much. Yeah. So, I mean, first of all, it's the region actually has the third most populous country in the world. So you've actually got a fair amount of population put together in the region as such. And interestingly, Singapore, where we are located, is not the most populous, right? It's only got a population of around 5.8 million. But for some reason, I mean, this, because of the ecosystem that we have here in the region, typically becomes the location where most of the organizations come in, put in their headquarters, have a lot of the decision-making power over here. And essentially, this becomes the place where a lot of the decisions get made. So the government has recognized that. And from that perspective, they've actually put in a lot of policies over here in Singapore which support the growth of such enterprise. They are very happy to basically co-fund, support in terms of infrastructure, and really go all out in terms of supporting the growth of the platforms. One of the partners that you see below is Temasek. Temasek is the sovereign wealth fund here in Singapore, and they essentially have funded, I think, about 6-7 of the unicorns that have arisen from the Southeast Asia region as such. The second thing is, other than population, is the demographic. It's got a fairly young profile when it comes to the age as such. A lot of people who like to be on the internet, a lot of people who like to essentially be early adopters, who are basically open to new ideas, etc. So anybody who's trying to come in with a concept, etc., people are willing to listen to and be open to new ideas as such. Apologies, Trina, is it possible to put there's a little bit of background I'm getting.
Yeah, perhaps if everybody can put their phones on mute, please, or turn on the mute buttons.
Thank you so much. Perfect. That's just awesome. Great. All right.
Wonderful.
Now, table 3 on the top, that essentially shows just how fast the economy is growing. What the bubbles essentially represent the size of the economies and the size of the population over there. And where they are on the scale is Indonesia and Vietnam. So they are just racing away. I mean, they are just zooming away when it comes to adoption, when it comes to basically all of the new adoption of new technology. So any platform that's getting launched there is massive adoption, and there is just so much that the business, over there, the people over there are willing to accept. Table 4 shows us from a financial services perspective that there is a super massive amount of opportunity from an unbanked population perspective. Not like literally half the population is unbanked. And that represents a wonderful pool for any of the fintechs that are coming. And that is why you see a lot of innovation, a lot of opportunities for micro level financing and micro level opportunities for companies to kind of come in and serve that unmet need at this point. Guru, Jay, Rob, if you'd like to add on.
No, I think, Nitin, the only point that I want to probably add, and for the benefit of everyone, is from a gateway perspective, what makes it attractive is that the regulatory landscape also, right? So MAS has always been looked upon, which is the regulator in Singapore, as playing the lead in terms of establishing the norms as to how specifically fintechs operate, right? Be it the sandboxes or the control requirements. Obviously, a lot of the countries have their own regulatory kind of requirements, be it Malaysia or Indonesia, but a lot of these countries take the lead around how MAS looks at operating with fintechs. So that is another reason why we see an emerging growth of fintechs, especially from the US, and we've seen that in Croatia as well, that they increasingly want to kind of look at the APAC market, start off in probably Singapore and Hong Kong, and then expand into the other ASEAN countries.
And Rob, if I can ask about ag tech. So obviously you're based in Singapore. When we think about ag tech, I guess we don't really think too much about Singapore given the size. But in terms of ag tech across the region, where are the opportunities at the moment?
Yeah, look, it's a really good question. I mean, Singapore, as mentioned, is viewed more as a hub, and increasingly so connected to Silicon Valley, to Tel Aviv, to Telangana, and also to Australia. And so, there's a huge focus from the government to facilitate accelerators in ag tech and food tech. So they're actually intertwined. Seeds Capital just put in 90 million last year into facilitating accelerator programs. And that's part of their 30 by 30 strategy to lift local domestic food production from 10% where it is now to 30% by 2030. So Vietnam, definitely, Indonesia. There's actually emerging economies also in places like Myanmar. But the linkage into the subcontinent, into North Asia, shouldn't be understated. So there's lots of opportunities. It's just a natural landing point for all the reasons that are outlined, but also a really fundamental one is governance and language. So it makes it easy to land, to establish a company basically in an afternoon and open bank accounts. But at the same time, it's creating networks, not so much a hub and spoke approach, but more of a web across the region. So you don't have to come back to Singapore, you can consolidate here. What it means is you can actually reach out and engage with the regional economies.
Thanks, Rob. And Jay, from a medtech perspective, similar question. Singapore is quite small, but we're hearing that it's a really great location to base within the region. But in terms of the other markets, what do you see?
Okay, thank you for the question. Yeah. So when you look at the landscape for the healthcare opportunities in this region, first thing we need to keep in mind is that, what is the spending capability of each of these countries, right? So when you look at countries in Southeast Asia, Singapore stands out because, the per capita spending is close to some $76,000 to $80,000. So, and 4.5% of that goes into healthcare spending, right? So it's a very attractive market for high-end premium products. And when you look at the demographics of the age population here in Singapore, they're pretty much close to most of the developed nations in the Western world, like Australia or Canada or Europe or US. And the advantage in Southeast Asia, so when you look at Singapore as an opportunity, it's a premium, market where most of the companies do want to have, though, in terms of size of the market, we are only 6 million people, but it's a very important market to establish their presence in this region. And secondly, from a regional perspective, um, so the population, we are close to some 700 million people in this region, and they have a variety of disease profile existing in this region, and different price points and different value propositions you can take to market, right? So when I entered the venture advisory services a couple of 5 years ago or 6 years ago, uh, I was hoping that with my healthcare background and consulting, and I could broker number of deals. So 5, 6 years ago, we could not see investors understanding this healthcare space so much well, because one reason is that the gestation period for any investment to kind of to bear fruit is longer in healthcare technologies. And over the years, we have seen the university-driven initiatives gaining popularity in Singapore and the region. So which means they're creating what you call value added high tech healthcare solutions from university research work. Then that ecosystem is growing now. In the last 2 years, we're seeing a number of venture capital funding such innovative companies. There's avenue for it. So in terms of growing opportunity, see, and Singapore is an important, significant market for healthcare. Is because one reason is that when you look at the GDP composition of Singapore alone, it used to be biomedical is to be 25% contributions. I mean, of course, it's in the last couple of years come down to 20%. So, but they're looking at value-added services. So, any product which is developed and in Singapore, their ambition is always looking at how to market in Australia, how to market in Europe, how to market in US. So, so there is a great synergy. Companies wanting to have the presence in Singapore because it gives that the framework, the ecosystem for them to lead forward from here to different markets, as well as creating a presence here, and also gives them a good understanding and ability to access the regional markets very easily. So yeah, so it's a very attractive market for healthcare.
Great, thank you. Thank you, Jay. So I just need to admit somebody into the call. In terms of Rob, just going back with you to AgTech, in terms of COVID-19, what impact are you seeing? Australia is a massive partner with the region around providing safe, secure, sustainable food products. But
Yep.
what impacts are you seeing at the moment?
Yeah, I mean, Singapore's for a number of years now has really planned for this scenario. And I know there are real thought leaders like Paul Tang and others who have thought deeply about this and contributed to the dialogue with government agencies about planning for the situation. So you see really strong, comprehensive strategic partnerships like between Australia and Singapore, but also other countries like Canada, New Zealand, and they've just recently come out strongly in favour of maintaining, where possible, supply chains and not cancelling contracts. You do see some localised disruption within supply chains. It comes in the form of less about production and productive capacity, and more about supply chains and delivery. And so it's nothing like a black swan event to highlight where you've got weaknesses in your supply chain. And so Singapore is really well planned in terms of stocks, in terms of strategic partnerships to maintain supply. There was a point there where Malaysia closed its border, and not for food deliveries, but for migration. And that caused a short-term panic buy in the supermarkets. It's amazing how many people are baking these days. So flour and yeast are pretty hard to come by. But aside from that, it's pretty constant. It's pretty predictable. There's certainly a shift to online because there's the restrictions on going outside. At least you can go outside, but you have to wear a mask, and of course the restrictions on safe distancing within supermarkets. So there's a real shift to online. Of course, those businesses that you can't switch on and off, like a dairy, they have to milk twice a day. For veggie production, they have to plant, and so those cycles take time based on forecasting shifts. And that's why you see a lot of produce rotting fields. They either can't get labour, they can't get transport, they can't get clearance, they can't get air freight. And so they're probably the short-term supply chain inefficiencies that have been sorted out. And post-COVID, I think that's probably, you'll see that as one of the key areas of focus. Even now, how do we actually bring more transparency, predictability, take out inefficiencies in the supply chain? And so we've talked about things like blockchain, and we work with a company here called Rice Exchange, who are developing a ledger platform for bringing transparency into rice, pricing and also deliveries to avoid default. And that sort of platform is going to be installed more and more, I think, as you digitise the food throughout the supply chain.
Yeah, absolutely. And in terms of pivots that you're seeing, Rob, so for example, in Australia, we're seeing beer brewers switching to hand sanitizers. Is that, are you also seeing pivots in the industry as well?
You don't see it directly here in Singapore. I mean, the pivot is more, and it's been happening for maybe 18 months, 2 years, where there's a real shift in focus to promoting Singapore as a hub for bringing technologies and innovations and capabilities together, and then using that to in turnkey solutions outside of Singapore, but also to focus on what investments are happening here. So the government are building an 18-hectare agri-food technology or innovation park. So they're putting a lot of money into that. They're putting huge amounts of money into startups like we've seen. And the whole idea is to facilitate efficiencies in vertical farming, aquaculture, and also cellular ag, which I think holds a lot of promise for localized food production systems that can substitute for mainstream imports.
Wow. 18 hectares. So when are they looking at having that innovation?
That's going to be commissioned in 2021. So it's already into full swing, and we're working with a couple of companies that are building in that park. Heavy focus and looking to countries like Taiwan, and also Netherlands have got an amazing facility who are sort of fully integrated circular approach to circular economy and waste to energy systems. So I think they're probably outcomes that are going to be fast-tracked because of the COVID-19 situation. And I think you'll see more and more investment and focus in fast-tracking that development.
Yes, and Rob, we have a question here for you. What are your thoughts on cell-cultured plant-based meat trends in the region, and how COVID-19 might affect these trends?
Okay, so there's two pieces to that. So on the plant-based, so meat alternates, so can be plant, can be fungi, can be algae-based, can be bacteria-based. I think where you've got scaling potential, in particular for those localized production platforms, you've moved sort of from a tofu or a tofurkey to something which is now got a lot more flavor and a lot more texture, and at a price point that's easily substitutable. And so I think that trend is more driven by consumers, not the fringe, well, I should say the fringe, but vegetarian vegans, but a small mainstream flexitarian segment that are eating meat less frequently, in lower portion size, but at a higher quality point. So that's where Australia is really well placed. But at the same time, for cellular ag, and of course, there's still lots of work to be done on the scaling platform, the scaffolding, the media that they use for that. But there are quite effective plant-based alternates. A couple of companies we work with through the Grow Accelerator, we're a program partner here. We've got very effective plant-based alternatives for the media. So I'm pretty confident within 5 years that you'll see a shift where there's capability for fermentation in local place fermentation. But I think the only other point I'd make there, and just generally between the shift to plant-based or cellular ag, we don't actually think that animals will be taken out of the food production system. And part of that rationale is that you have 500 million smallholder farmers across Asia Pacific, where animals are a really integral part of their social fabric and their economy, their microeconomy. And so I think it's probably more to say that where you have broad-scale feedlotting systems or intensive farming production for chickens or for beef, those guys, and pork, and in particular as a result, issues like swine fever, there's more onus on intensive animal production to lift and to innovate. And then we think there's lots of opportunity there also to bring in low carbon footprint systems through regenerative ag also. So I think lots of opportunity, but it's an integrated play. It's not one or the other. We know that if we go to one or the other system, that's typically you leave a weak point. And so it's an integrated play to meet the rising population growth across Asia, which is spending more on their disposable income on meat or meat substitutes.
Great, thank you. It's a fascinating area. I know we could talk for hours on this, but I do.
There's a really good, great company here. Lots of great companies, but a startup company called Shock Meats are doing some amazing things with their platform. They've been supported through Big Idea Ventures and the team there, but also you have going through Big Idea Ventures, a company called Grounded, who are doing amazing things with cauliflower-based cheese, so dairy-free cheeses, or Fable from Australia, good Australian company, of producing shiitake mushroom-based, like a beef rendang replacement. So there's lots of innovation happening in this space, and Impossible and Beyond have come in for a bit of stick of lately because of claims about over-processing. But I think what they've done is they've really led the way in changing consumer perception and profiling and taste perception and mouthfeel around meat-based substitutes. And you'll see now this sort of the fourth iteration of products which perhaps are less physically processed and come with less ingredient loading, but just as nutrient dense.
Fantastic, Rob. Thank you. Guru and Tim, let's turn to tech industries. So what are you seeing in terms of tech industries? Obviously, Singapore particularly is a hub for financial services. Are they open for business? Are they still figuring out productivity levels? And so what are you seeing? And again, are there any pivots that you're seeing or emerging trends that you're seeing in the industry as well?
So maybe I can start first, and Nitin, feel free to add, right? So I'll kind of break it down into kind of the three layers, right? So if you look at the top of the house, you have the regulator there, which is trying to kind of obviously push the case given the COVID scenario, right? So if you look at what EMEA has specifically done, is they've launched a $125 million package specifically targeting the fintechs. So there are a couple of things in terms of wage subsidy, in terms of training allowances, and also for fintechs, specifically in Singapore, they can probably claim a back of their rental leases, right? So I think those are the kind of things which the regulator is trying to kind of essentially do to promote or help the fintechs through the tough phase for the next 9 months. But more importantly, I think what we've come across is there's also a platform called Apex, which is basically some sort of initiative by the ASEAN Banking Association and the EMEAs. And they're going to offer a 6-month trial. And this is good news, is that any fintech can do a plug and play into that infrastructure, and the fintech would then be accessible to all the banks in the ASEAN location, in the ASEAN countries. So it's like, instead of going to individual sandboxes at the banking level, you probably have an industry-wide platform where once they get kind of through the platform, anyone can basically plug into their infrastructure and see how the fintech kind of or the solution works. So those are the kind of incentives which the regulator is trying to kind of do top down. From a banking perspective, obviously, it's a little bit of a wait and watch, right? Clearly, I think some of the banks are realizing that remote working, digital adoption has to increase. So on one hand, we are seeing like the aggressive banks like DBS, which is one of the bigger banks here in Singapore and also in Asia, aggressively pushing for digital solutions. In fact, as of like 2 weeks ago, they launched an investment management solution for helping retail investors through the investment life cycle. Now, one would have thought, given the current situation, they would have pushed it, but they are kind of going ahead with their plans. More so, if you kind of look a forward view, I think in 9 months, they're going to kind of get into open banking and allow the data from other banking institutions to reside and provide the holistic view. So some banks are taking the opportunity to increase their digital penetration. Equally so, there are other banks that are using their time to renegotiate their contracts, right? Be it with vendors, but also with fintech. So we've come across scenarios where tech companies and also fintechs are busy now going back to the drawing board, renegotiating their contract because there is pressure from a banking perspective to reduce the cost. And if you go further down from a technology fintech perspective, I think clearly the pressure is being felt when we speak to some of our, especially the US fintechs coming into APAC. There is pressure on headcount. They are losing headcount in the US, so that is putting their plans for APAC expansion on hold. So I think clearly we can kind of see that happening, but equally so, there are players in the wealth tech space that kind of see an opportunity to kind of position their product, say, for advisory services, because there is no longer going to be face-to-face interaction. So even advisors need to have tools in place to support private banking, ultra high net worth customers, right? So there are opportunities in specific segments, but US companies, European companies wanting to come into APAC, I think is a little bit of a wait and watch, which is where I think Croatia is probably kind of well positioned to support these companies. So I'll stop here and maybe Nitin can add a few more lines.
I'll just add on two more things, I guess. The first thing is, I think because people have started working remotely right now, so one of the companies that we're working for is actually in the cybersecurity area. So our engines are actually picking up higher volume of threats because the existing systems that the banks had, that the companies had, their VPNs aren't in place. People are basically working on different kind of machines. They're working where they don't really have that same kind of trust set up anymore. So we're actually picking up higher levels of cybersecurity fraud. And so that essentially gives us the opportunity to go explain that a little bit more. And I think there's a little bit more adoption in terms of how people are looking at these solutions. The valuations that we are seeing for some of the hardware type companies, they are slightly dropping. They are staying flat. But for some of the online-based platform, there is a platform that we're working on the edtech area, and that's a new area that we kind of picked up. So that one actually, the valuation is actually going up. So they've actually seeing more demand coming in right now. They're actually seeing more requests for such a thing, and in fact, they didn't really have their investor pitch all aligned, but they're still having people coming in and throwing money at them at this stage. So it's a very like somebody's lost is somebody's gain kind of a situation. The third thing that is happening is somehow when we are trying to position things with the key stakeholders, they actually have a little bit more time right now. Right. So, we are seeing people willing to talk to us. Like we ask somebody for time on a Saturday. Normally, I wouldn't actually touch anybody's Saturday or a Sunday, but in this case, they're like, "Thank you, get me away from my kids a little bit." So, so to a certain extent, I mean, if we don't position ourselves right now, I think there's something that we will lose, because when this whole thing ends and when business opens up as usual, people are going to go back to you would have lost this opportunity to position yourself right now. So they're actually a little bit more open to have that kind of a discussion with you to understand really what you're trying to position, etc. So I think those are some of the things why we think this is actually an interesting time. Also, I think for like to Guru's point, some of the US folks, etc., that we're talking to, they are seeing a major impact in their home market right now, where they are seeing a little bit of a adjustment. So they are also looking for opportunities outside, and that is where the Asia Pac market seems to, because if you look at the banking stocks, they don't seem to have been impacted that much. They haven't taken that kind of risk on their balance sheets right now. So they are a little bit more open in terms of discussion, in terms of adopting, and in terms of having those kind of. So from a risk perspective, I think the customers here are not feeling exactly the same kind of hit. So there's still, while they might not be the first ones to kind of go in and say, yes, I'm ready to sign the check, etc., but they're still willing to, they still have some money left in their budget right now.
Yeah, it's interesting what you say about the banks, because in Australia we've definitely seen the hit on the banks. The share prices have all dropped quite remarkably. I think it's due to this particular black swan event, but there are a few other issues with the Australian banks ongoing at the moment. Jay, in terms of pivots that you're seeing or new developments that you're seeing, in Australia, one of the things that we are definitely seeing a massive increase running is around telehealth. What are the trends that you're seeing at the moment with COVID-19?
Well, I mean, like until until March, I think, we were operating like a normal market here in Singapore, end of March. Only, we started experiencing this COVID lockdown from beginning of April. So the market is kind of, is trying to adjust right now in terms of, how they want to, some of the initiatives they have taken in terms of, reviewing, evaluating companies. All that process is still going through a phase. They're learning how to do that. So in terms of opportunities, like for example, the support from the number of supports which has come from government is phenomenal. Like since I think beginning of the year, we have already had 3 budget announcements where they're supporting people from large corporates all the way to startups and individuals, right? So I see it as there are two different scenarios here. One is that these startups, this in any way they are on a, they're expected to function, with limited budget and with frugal mentality, right? So they're able to survive in the next, I think, in my opinion, next 6 months. Also, they'll be able to survive. Where they miss out is that the opportunities to go and network and find new investors. So that's where they're missing out the opportunities. Because another initiative where we are missing out is that the number of startups, like for example, the incubation program I'm associated with, right? That university has a program to churn out 25 to 30 startups every 6 months. So now that process is delayed because of this. You cannot have any kind of what you call events and training programs, and so that's going to be an impact for new startups coming for the next 6 to 8 months. So there'll be a gap of 6 to 8 months. New startups, slowing down, but I think the existing startups should be able to survive. So that's what about the impact of COVID-19 with respect to what's happening to the startup, the healthcare startup particularly. Now, addressing your question about the telehealth, like telehealth, there are a number of companies who are already, trying to do that solution in different formats, right? So the early part of, I remember, was a company called Actune. They were about 4 or 5 years ago, I remember seeing them launching a series of telehealth, particularly addressing rural parts of Indonesia, where the access to doctor ratio is very poor. Now, in the current environment, if you see the number of platforms which are gaining popularity, like DocDoc, MyDoc, Doctors Anywhere. In fact, there's one company recently raised about $30 million because they just have a platform for connecting doctors. Right? So now, of course, investors always bet on, okay, this is an opportunity, this condition is going to get prolonged. We don't know for sure. I hope I have a crystal ball to tell you how long this is going to happen, prolong this condition. So with that hope, they're investing on these kind of, so they're definitely, this is a time telehealth, startups have an opportunity to, prove their mettle. So yeah, so if I have friends, with telehealth platforms, I'm going after them and telling them that, come, let's, this is the time we need to go into the market, show that, we can deliver what we have been promising.
Yeah, great. Thank you, Jay. And that's a really great lead in to the investor conversation that I want to have. But before I do that, just a reminder, if you do have a question, then in the chat section on your screen, pop in the question there and I'll make sure to ask. So Rob, investor activity, what's going on in ag tech?
Look, I think like everyone else, there's direct impacts, most notably in lack of engagement, face-to-face engagement, which is often, a hallmark of getting in front of doing fundraising, getting in front of investors, having discussions, pitching directly. So obviously a lot of that has to happen virtually. There's no doubt that whether it's VC all the way through to full-blown private equity, that there's a certain amount of money drying up. Investors are reassessing their position, and I think looking at their portfolio companies and assessing the cash burn, the cash rate, and what their runway is. Having said that, there's a surprising amount of dry powder around in the market, and so private equity and family office in particular that I'm working with are really set to invest, quite strategically. They just need to understand where that investment can take place, and perhaps the appeal there is not only still taking advantage, say, of the plant-based sector, which is still gaining pace and hasn't really, at least from what I perceive, hasn't really taken its foot off the pedal. If you compare that maybe to more traditional forms of ag tech investment like SaaS platforms for in-field advisory, perhaps they're doing flat rounds on their fundraise. But having said that, I think that's okay. There's still, if you've got a fundamental value proposition for your business and you've got solid investor support, as long as you plan for that and carefully map out your OPEX and tighten up like everyone else, and keep communicating with your investors, I think it's okay.
Yeah.
I think the only other, obviously in terms of specific focus, I mentioned supply chain, so transparency, supply chain transparency for provenance, but also for waste. There's a huge amount of waste in our food supply chain. So there's a lot of talk, of course, around food productive efficiency and utilizing arable land, but the waste component is actually not so focused at the moment. It's increasing. There was a great report by Deloitte that was done last year or the year before here in Singapore that really highlighted 30 to 40%, even pre-kitchen, is thrown out. So the companies, so young companies, a young company we work with, so shout out to Betty and the team at Confetti. They're doing some amazing things with vegetables, with waste vegetables and snacking. So into the North American market, she was part of the Big Idea Ventures cohort, the first one, and lots of opportunity there for nutritionally dense, healthy alternate to potato-based snacking foods. But there are companies doing some amazing things also in valorization, so taking processing waste, which would otherwise be fed to cattle or pigs, and turning that into products. So Natural Evolutions is a great company from Queensland in Australia. There's Truly Good Foods from South Africa doing some amazing things with pita bread and rice and noodle replacement, again from cauliflower. So if you're a grower and you want to grow cauliflower between cheese and noodle products, it has a profile that lends itself into the plant-based system, in addition to soy and pea protein. And that's the only other limitation. There's a question before about plant-based proteins. There's a heavy demand upstream for production and processing for plant-based proteins. So traditionally soy and typically non-GM soy is in heavy demand, as is yellow pea protein. But increasingly looking at alternate protein sources such as well, there's lots of protein sources, but fava beans and other pulses, but also outside of that. So water lentils is another really, really interesting crop. It's been scaled by a company called Paravel in the US, where it's basically doubling in size every 3 days, and it's got 10 times the efficiency rate per unit area of soybeans. So, I think this will drive efficiency, which looks at interdependent supply chains for even for plant-based protein. So relying on other countries like Canada, France is big in supply, Australia, and probably narrowing down the supply chain and the value chain, everything from labels and packaging all the way through to delivery systems. I think you'll see less interdependencies with other countries and moving more to an isolated approach within country.
Yeah, thanks, Rob. Nithin and Guru, we've got a question here from Dan, who's in the InsurTech space here in Australia. So would you be able to comment on the InsurTech industry in the market? And also, I'll read out the question from Dan. With the 125 million mass FI and FinTech initiative announced last week, does that also include insurance and InsurTechs? Is there an opportunity for Aussie-based InsurTechs to access this incentive through working with Singapore SE Asian insurers? Guru, Nithin? Guru, you're on mute.
Let me take the first question, right? So last year was interesting because there was more than $1 billion in investments in kind of the fintech, which includes the insurance tech space, right? So if you look at Sing Life, which is one of the startup insurance companies, they received a lot of the investment. So clearly, I think you see the emergence of new players providing the insurance kind of for the play. You also have Grab now, which is obviously the traditionally operating in the transport space, but now getting into insurance and other kind of sectors, right? So there's obviously the insurance tech company coming in and kind of taking on the traditional rivals, if you will. But also, if you look at the bigger companies, be it the Manulife and others, they continue to invest in RPA-based solutions, right? So that continues from a claims management perspective in terms of operational efficiency. We are seeing kind of the focus continuing that. So we have the traditional players like Antworks and others, the Blue Prisms. They continue to kind of focus on that area. So I think that's where I probably see how the insurance tech industry is kind of polarized between the emergence of the new players and the operational efficiency play for the existing players, right? In terms of, is that clear? So I think I'll take a pause. Any questions on that?
Dan, if you want to take yourself off mute, does that answer your question?
Yeah, it does. Thank you for that. Appreciate the insight.
Yeah, and I think on the for the 125 million package, it broadly says fintech. I'm assuming it covers the insurance tech space as well. You have to be a Singapore incorporated fintech for you to kind of get the benefit. The 125 million package, which was recently announced, essentially kind of offers the relief for the fintechs that are incorporated or kind of have the incorporation in Singapore.
And does that need to be the head office incorporated in Singapore or a company entity incorporated in Singapore?
I think an entity in Singapore. I think that's I can say, if you can drop me a mail, I can give you the specific details around the package and what kind of incentives have been provided.
Okay, thank you.
Right. I mean, just on the investment part, Trina, I'd like to add on one or two things.
Yes,
okay.
Go for it.
Now, I mean, you see, we personally also invest in companies. I mean, we do angel investments, and currently, and so we are we think from both sides. We are conscious of the fact that this is a time when people are unsure about the future. So so there's a network of around 300 angel investors that I support, and so we are still looking at deals. We are still looking at opportunities in the right space. So there are opportunities in the deep tech area, in ed tech, in health tech, in remote working. I mean, so those opportunities are very well valued, and so their value continues to actually stay flat, increase at this point of time. Now, that said, we are not discounting any of the startups that had a value before this COVID issue started. right? Because they will have their value even afterwards, and we just can't do with online. There is need for offline. And this is a great time for a lot of the investors here to essentially buy into some of those opportunities. So they see that they are negotiating a bit harder. The valuations are a bit lower. They might ask a little bit more equity, but the funding still remains. There's a little bit more that we'll have to kind of think about. If you really can survive without raising money at this point of time, I think people are trying to avoid doing that and just manage the burn. But that said, if there is definitely a good business, a solid business case, I think funding can be made available even in this situation.
And I think, as Rob pointed out, it is about making sure that you continue to position yourself with investors, whether it's webinars, joining their webinars. I know a lot of VC firms here in Australia are running webinars. And so being engaged and continuing to be informed in that way. I do have two more questions. So Natim, we'll stay with you, or any of the panelists. From Linley, what is the general setup cost for companies into Singapore?
Maybe you can jump to the page we had on the screen.
Yeah, I think there's a page on your pitch deck, on your presentation. While you're getting that up, it's very reasonable. I mean, both in terms of time and complexity, probably less than a day. And I don't know, probably depending if you have a local director or a local PA, probably less than $5,000 total, including all costs. So there's some really good companies that are supporting in that platform.
This slide?
Yes, that's right.
Yeah.
So this is basically a extract that I took out of the EDB website. So they essentially, you can actually run this on your own. I gave the link over here. I mean, you're happy to go test it out. You can just put in the industry that you're in. You can put in the type of business that you're in and what kind of staff and the profile of staff that you're looking for. And it'll help you get to a very reasonable estimate. When I looked at the output, I think I was reasonably happy with the range that they kind of, came out. And that generally gives you an idea. Now you can choose to, in this particular example, the way I did this was I actually put in a co-working setup. I put in very basic level of services, startup services, incorporation and things like that. But you're welcome to play with that, and you can actually get your own insight in terms of what the cost of setup would be for your own entity.
Great. So
yeah, if I may add, setting up a company in Singapore is very easy. You can do it for as cheap as $315. You can register a company with a $1 share as a one director or one shareholder, right? I mean, your company secretary, you can get as cheap as from $300 all the way to $600. Your company auditors, maybe $1,500 to $2,000 per year. And and you can operate an office from one desk, which would cost you $50 a month, all the way to $500, depending upon where you want it, right? So in terms of operating a business is very complicated. I mean, you have a number of ways to go start with less expenses, and you can scale it up. And in terms of access to people, there are a number of programs run by universities where you can tap into these, graduate students or PhD students, right?
Yeah.
I mean, you can so that way, operating in Singapore, it's very easy. I mean, that's my personal experience.
Yeah, and Enterprise Singapore are very good with how they organise. And I think the only other point, Trainer, is that there are lots of great accelerators in food and agri, but also in other sectors. Really do your research on the accelerators that are available, because not only do they provide funding, they also provide mentoring, which is also important, and support services. So, I think for startups looking to scale, say in that growth mode and looking north, landing in Singapore, finding an accelerator, or at least a community, and it could be also, so if you're an Australian group through Austrade, it's really cheap to join, and it's you tap into a network, and then from there you can sort of reach out. So it's very simple.
Very easy. And Rob, I'm just going to stay with you just for 30 seconds because I do have another question for you. And then I'm going to ask each of the panelists how you can assist Australian companies with accessing the region. So Rob, the question from Andrew is, most of the plant proteins coming from North America and the Asian sources to date are limited. Are any opportunities for Australian growers or producers of plant algal protein?
Yeah, yeah, great question. I think, traditionally companies from North America have taken a really leading position, also Europe. There's companies like Australia Plant Protein, which the EAT group are an investor in, and so they're actually in a raise at the moment. So they've got facilities, consolidated facilities in Horsham, and they're looking to expand those also into Melbourne. And so taking advantage, in this particular case, of fava bean isolate, but also where they're positioned in Horsham, they're actually in a pulse growing area. So, sourcing for peas and lupins also. So I think there's more that can be done. And I think a lot of that is probably coming also through the GRDC Grain Innovate platform. So for Australia, I think real focus on consolidation and finding ways to not only just put it on a ship and export it, but actually evaluate it into protein isolate and then sell those as a B2B play into these companies.
Interesting.
And just on the algae side, absolutely. I mean, there's so many things happening in that front on algae, and as I mentioned, water lentils, and scaling potential is amazing. So differentiating crop production platforms and using that. So seeing Australia as a protein, a premium protein supply, whether it's animal protein or plant protein or fungi, I think is one of the really clear takeaways from today is that there's amazing opportunity for Australia to consolidate and go with a single message to market.
Yeah, thanks, Rob. And we're just going to stay with you 30 seconds. How can you assist Australian companies with access in the region?
Yeah, look, I think it's often people ask me that. I think it's about network initially, network and insights. So if it's about market expansion, if it's about working through the accelerators, as I mentioned, we're a program partner with Big Idea, with the Grow. We also work as a mentor with Big Idea Ventures. So depending on what your product is and where you're looking to expand, landing in Singapore, we can find ways to work with you and shape out your product. Accessing capital. So that's important, of course, but connecting into networks and really working out a strategy. How do you expand and how do you connect with people that we know in Indonesia, in Vietnam, in Thailand, up into China and across to India? So my advice is, if you're thinking about expanding or you've been considering it, drop us a note and we're happy to connect you with the right people and build it out, because it's amazing opportunities. And Singapore and Australia, we've got a really, really tight relationship.
Great. Thanks, Rob. Jay, 30 seconds. How can you support or assist Australian companies coming up into the Southeast Asia region? Jay, you're on mute. Jay, you're on mute.
Yeah, I'm on that. Yeah. So in terms of opportunities, like when you look at the problems you're facing in Australia with respect to disease profile like oncology, diabetes, cardiovascular, or infectious disease, right? It's pretty much the same level of issues Singapore also faces, and the aging population and the problem, the cost associated with it. See, if you look at the World Index on the medical cost inflation, I think it's been skyrocketing in most of the countries. And one of the articles I read recently, it says that Singapore has the highest. So you have opportunities. You have any innovative solutions which are out there in Australia where you can help to reduce the medical cost escalation. Right? So that's a great opportunity, because traditionally Singapore used to be a good medical tourism hub. Of course, now the leaders are countries like Thailand and Malaysia and India. So they're taking a good chunk of it because they have cost advantage. They have local pharmaceutical industries development, the medical device industry development, and cost is one area associated with it. Like when I look at the total healthcare services delivered in Singapore, the cost of people purchase of goods are the significant, almost 65% of that. That's where the money is spent. So if you have solutions where you can help manage the cost, that's a great way to do it. Second is that Singapore government is proactive in terms of wanting to create innovative solutions to not only for Singapore but scale it to other global markets. So they have created sandbox environment within the hospital settings, the National University Hospital, they have a sandbox environment where they give you sanitized data for you to work with certain disease conditions or if you have a solution, right? So that's a good place to, to come and explore, work with some of these data opportunities. Otherwise, it's a conducive environment for, to test the market, even to do some clinical trials in association with some of the hospitals. Like, if you're a locally registered company with local presence, it's fairly quite easy. So the advantage of Singapore is that we can operate it with this market established.
Okay, thank you. And Natinga, I'm going to ask one of you, given that you work at the same company, your advice for support that you can give Australian companies moving into the region. 30 seconds, we're way over time now, unfortunately.
It's all right. Trina, if you don't mind putting up the page, if that's all right.
I'm becoming an expert at this.
Thank you so much. Yeah, no, I think very simply, I think, guys, we are here for you, and just think of us as your arms, ears, eyes, legs, whatever in the region. So we bring in a certain amount of expertise in terms of some of the domains. In addition to that, there are a few other pods that we are operating here. We have experts from PropTech, from consumer, from cyber, who are currently associated with us. So if you have anything or any opportunities like that you'd like to maybe just have a chat with us about, drop us a note and we'd be happy to connect. We can help you work out a strategy. We can help you kind of think through what it means to access here, what kind of market sizing you could have, what kind of a cost estimate that will kind of work out for you. What's the return really? What's the payback that you can have? What's the timing and everything? So, I think that's what we can say. Guru, if you want to.
No, it's pretty much spot on. I think, 30 seconds is over. So I think our value proposition is clear. So thanks. Trina, yeah, we can't hear you. You're on mute, I think.
No, I can't hear you, Trina.
I think it's maybe after an hour it automatically shuts down.